Welcome to Startup Wins. Twice a month, we share real stories and smart tips. Subscribe and join the journey.
Welcome to Startup Wins. Today, we are fortunate to have an amazing founder on our show, and she's also a few other things, which she'll kind of describe, hopefully. But welcome, Kim.
Thank you so much, Brandon. It's really a pleasure to be here. I appreciate the opportunity.
Well, we're really glad you're here. Obviously, we've met before, not only in Denver, and then before that through one of those Kovacs forum little I don't know what you call them, a pitch session or whatnot. And it's been honestly wonderful getting to know you. But I know you. But do you mind sharing a little bit about yourself for our listeners?
Sure, I'd be happy to. So, going in the Wayback Machine, before any of this sort of got captured digitally and then exploited or what have you on the internet. So maybe some things that you might not have been able to find out about me. So I really started kind of my entrepreneurial journey when I was about 10 years old. And I grew up in Ann Arbor, Michigan, and I started selling beer at the age of 10 because we literally lived right downtown where the stadium is. So when Michigan would have its football games, we'd have about 100,000 people that would walk by our
Right.
house. And I was literally selling everything that I could find out of the refrigerator and then some. So sodas and water and snacks and this. I tried to sell my sister. That didn't really work. And so I would sell beer. And it was interesting because the frat guys next door would actually bring it, and I would, kind of cut them in on the deal because who's going to say no to a 10-year-old selling beer? I mean, come on. And then I employed one of my neighbors like three doors down or like three streets down, because the guys would like drink the beer and walk with it, and then they would need a place to throw the can or bottle when they were done. And so my neighbor friend would collect all the bottles, and at that time it was a 10-cent refund in Michigan. So we were making money at the beginning and I'm making money at the end, and my cost of sales was zero because I was getting my beer for free. So it was a really great business model until, my mom found out. And then she said, okay, we're going to shut this one down. So that was kind of my bug. That was kind of my thing of, kind of finding these opportunities and really kind of maybe approaching things in a little bit of a different way, which has always been sort of my forte. So I have had startups in the fintech world, the clean tech world. I've invested in companies that were in biotech and various other things. I seem to kind of trend a little bit more towards technology, but I
Right.
think there's also other areas that need kind of a technical mindset in the startup world. So now I'm in materials. And so, it's been a little bit of an evolution, but that's kind of where I got to where I'm at today. So,
Well, when I saw you in Denver and we were sitting down across some other folks at lunch, you said you were a seven-time founder. Is that correct?
that is correct. I don't
Wow.
know if that's good or bad, Brandon, but it is what it is. It's the number. I had a couple of startups that did really well. So one was called Optionease, and it was a fintech platform for basically expensing stock options. And so I was the CFO of another startup that I had called Oryx Energy. We had raised a bunch of money. We had just sold that company to DuPont for $350 million. And I was watching the new management team come in, and I was ready to kind of do my next thing. And so I started a company called Optionease. And that was a really great one for me because I love numbers. My background is finance. Economics and finance, they have to kind of weave in together. And I built a platform for CFOs. And at the time, CFOs didn't really have much in the way of software. Like we had our Excel spreadsheet, that's great. We had our accounting software, but any other tools to kind of make our lives easier just didn't exist. And so we built Optionease so that CFOs could manage their stock plans, they could expense them and be compliant, right? It was a compliance tool. And that was a rocket ship, boy, I tell you, because nobody was building software for the CFO, especially the private company, small, maybe first, second round of funding kind of a CFO of a company needing to do this, and their auditors couldn't. So we built that over about 4 or 5 years. I sold it to a company called Solium, who then used that platform and then turned it around and sold it to Morgan Stanley for $1 billion.
Oh,
So
wow.
so
Really,
if
really.
anybody ever uses Carta, That is kind of a little bit of what we did.
Hmm.
Not going to say anything because I know Henry and he did a great job in taking a lot of the employees that I had, and so forth. But we had developed the first really electronic cap table.
Oh wow! So
So
you're the predecessor to Carta. That's fascinating. No, actually,
yeah,
a team of mine and I are talking about building something that's even more advanced, and
yeah,
I'll have to talk to you about that later. But that's
yeah.
fascinating that
Let's
you
do
guys
that.
built that.
Yeah.
Yeah, no, it's such an important part. I mean, let's talk about that, right?
Mhm.
The cap table. What do you think about that? I mean, it's probably been an evolution of thought, from the first time you
Yeah.
built one till now.
Yeah. Well, and that was the hard part with the cap table, right? Because the CFO has to record the expensing of, right? So they need to be in it and being able to manage it. But at the time, lawyers were owning it, right? And, so there was this push and pull between the legal community and the financial community of who should own the cap table. And I said,
Hmm.
well, why can't anybody own the cap? How about we all own the cap table and put it
Right.
on, a SaaS platform? Hey, put it in the cloud, and then we can all have, user roles and access so that you don't have, I don't want to offend any lawyer friends of mine, but, there's lawyer math and then there's real math. And,
Right.
as a CFO and a licensed auditor and other things, you have to be careful. You can't just sort of take others' numbers and just say they're right. You've got to back them up and you got to be able to recreate them. And so what we're basically doing is kind of normalizing the cap table, which also, by the way, didn't exist. There were, hey, Brandon, I'm going to give you some shares if you, stand on one foot and, hula hoop for an hour. You're going to get some shares in the company. That's a performance award. That's fantastic. I love
Hmm.
that, you
Hmm.
know, because
Hmm.
you can hula hoop like the best of them and probably somebody else over here can't. So I want to incentivize you for that job. That didn't exist either.
Hmm.
Accounting doesn't like and finance doesn't like variables. They like
Right.
things to be pretty set. And so
Right.
we were able to really, like I said, sort of standardize around all of these different things that people wanted to accomplish with their stock and incentivizing employees and then being able to bring that forth. And we had huge clients. I mean, our largest client was Alibaba, and
Hmm.
I mean, they have 800,000 or a million employees. And I mean, you can just imagine them now wanting to participate in this and giving stock to employees to incentivize. A lot of that was new, back in the, you know, 2000s and so
Right.
forth.
Right. Right.
Um, but for me, like I said, I like to make things simple. I
Hmm.
don't want to have anybody going out and trying to like recreate again, sort of like supply chains. You can't ask somebody to recreate a supply chain. They're already doing things a certain way. And the same thing with accounting and finance. CFOs have a certain way of doing things. So
Hmm.
our software looked and felt just like an Excel spreadsheet,
Hmm.
but it was online, and it
Right.
had
Right.
like some cool stuff behind it. So you didn't have to do all that work and you didn't have to know how to run a macro and pivot tables and all these other things, but it gave you the results you needed. And you can go in and out of Excel in our software, which a lot of
Hmm.
people just didn't like because you couldn't control it. Well, we figured out a way to do that. So, like I said, I like to make things easy. I like to meet
Sure.
people where they're at or customers where they're at. So,
Well, fantastic. So are you using that today? Since you were a part of it.
well, it's now owned by Morgan Stanley. And so, if anybody's got a Morgan Stanley account and you go online and you want to exercise your options or, cash them out or sell or buy or trade or whatever you want to do with your stock options, you're using my platform.
Okay, I see. I see.
So,
Well, I'm imagining, and I haven't seen it yet, but they probably changed it, maybe slowed down the product development, as
yeah.
most enterprise companies do. But with your latest startup, so let's talk about that. Let's talk about your current startup, Renew,
Okay.
right?
Yes,
It's Renew,
renew.
correct? Okay. T
Correct.
Tell us a little bit about that, and then I have a couple questions maybe related to the cap table, if you don't mind.
Sounds good. Yeah, absolutely. I think I probably didn't answer all your questions on the cap table, but we'll get back to that. We'll do a deep dive on that one in a minute.
Definitely,
Um,
definitely.
so Renew is sort of an evolution company for me. I came into a company called Santa Fe Farms back in 21, as I was kind of, well, let me step back one more. So I have been both an entrepreneur and an investor for the last 20 years. And so I kind of ebb and flow, I'll find a great company, I'll either invest in it or I will like jump in as management and so forth. And I just love that stuff. I love turning companies around. I like starting them from scratch. So I was running a group called ArcView, and ArcView was probably the preeminent investor in cannabis and hemp in the United States. And similar to Keiretsu, in fact, I've known Keiretsu for a long time, but similar to Keiretsu, it started out as angel investors, and it had a network of angel investors across the country. It had about 3,000 members in ArcView. And we would do events, we would showcase companies and invest, and we invested in probably 200 or 300 companies, about $400 million in total. I took over ArcView from the founders because they wanted to get out, and there was a private equity firm that came in and recapitalized the company. And so I was looking at how do I create more opportunity with the ArcView brand and expanding what we're doing. And I was watching hemp really starting to come up behind. It was like that, horse in the race, right? Everybody's focused on cannabis and all the cannabis regulations, but I'm looking at hemp and going, wow, given the 2018 Farm Bill, given the fact that you could use industrial hemp for pretty much anything, textiles and building materials and, paper and pulp and, all these amazing things. And we used to use hemp that way. Now it's a matter of reintroducing something, not inventing something new, but just a reintroduction. I got really interested in hemp. So I was recruited to Santa Fe Farms. It was in the hemp industry. And Santa Fe Farms had been building basically infrastructure to support the supply chain of hemp, because you can't just grow it and then hope somebody buys it. You've got to really show that you can grow a specific plant for this, it's economically feasible, all the things you do when you analyze a business. So when I came into Santa Fe Farms, we really determined that pulp and paper was the place to be. And the reason is because economically it works. Hemp doesn't work yet in things like textiles and we can get into a whole nother podcast about that. But in reality, economically, we have to use the whole plant and we have to have value of that whole plant. And so we found a way to do that with pulp and paper. And so Renew is taking the best of that knowledge and so forth, and the learnings and what we did at Santa Fe Farms, and then marrying that up with Paypax, who's been in the sustainable packaging in Europe for 15 years. Hence why I'm in Amsterdam right now, is to go visit their facilities, is to really go in and make packaging without any plastic. But the next evolution is also removing trees.
Okay.
And what we're finding is with brands, like you name it, any big brand, they don't want to swap one problem or issue for another, right? They don't want to replace plastic with something like a tree-based material and then now have deforestation problems or issues, right? They want to leapfrog to the next gen of things that are going to be regenerative and sustainable and circular and all these. That's hemp. I mean, if you put a definition on hemp, that's exactly what it is. That's why we love it. So that's how we got here.
And how long has this business been in existence?
So we are official as of October 1st of last year. And what we've been working on is taking those products that Paypax has developed and sold in Europe for the last decade or so, and now bringing them here to the United States. And we're going to have a couple of products that we're coming out with that are just extraordinary. Like they've been able to replace the Nespresso pod with a full fiber-based, hemp-based product. We've got yogurt cups. We've got, food trays. We've got, really cool, like shipping and sustainable packaging that is vibration sensitive, that can handle cooling. So that's going to be another big one for us. Are these ice boxes that can last for 4 or 5 days without having to be coated and crazy amounts of styrofoam. And it's fun being in that area, because to me that's all about that next big thing for me is not just about a good company, good opportunity, making some money, but it's also doing good, right?
Completely.
It's taking it to that next level. And for me, that's super important. This isn't just about $1 billion business and a unicorn and all
Mm,
these other things. It's about
mm,
what is that company going to be doing and how is it
mm.
impacting the world? And that's really important to me right now.
No, that's great. You seem like that. I mean, when I met you, you seem like you do just good things and you work with good people. Um, so let's bring back the cap table part, if you don't
Yes.
mind, and then I'm going to add a couple other questions related to. Hopefully, we can kind of share with other people who are building their own companies. But
Yeah.
so this is the seventh time you built a cap table, and you have all this knowledge in building a company that builds cap tables. How did you approach this cap table?
Hmm.
And it also, I didn't know the company was this new, so
Yeah.
it sounds like there's a lot of great opportunity for other angels possibly right now, right?
Yes.
And maybe even
Absolutely.
VCs.
Hmm.
So yeah, do you mind sharing a little bit how you thought about the cap table and how maybe you would recommend to other people how they think about cap tables?
Um, yes. So a couple things is that I am not stingy when it comes to the cap table. I
Mm,
was early in my
mm,
career and probably my first couple of startups. Every share mattered. Like it was, it was almost painful giving away some stock sometimes,
mm, mm,
to
mm,
people.
mm,
And what I realized throughout this is your cap table initially is a starting point.
mm,
It's not your ending point,
mm,
right? So if you are going into a business and you're like, I don't want to bring on investors, I don't want to dilute down, I want to still own this, then don't raise money,
mm,
you know? Because then you're going to be always at odds with your investors because they want to see performance. They're part of this. They're providing the capital and all this behind it, right? So part of your cap table strategy for me, the biggest thing I look at is who's my last funder and how much do I want to give them?
mm.
Or how much are
Interesting.
they going to require? And for what am I getting for that? So let me use the example of optionees. So I had some angel investors in. So I had Tech Coast Angels, I had Pasadena Angels, I had other couple angel groups, I had individual angels. Myron Scholes was actually on my cap table, which was really awesome.
Mm,
So I had a bunch of angels in. Then I had a VC, which was Miramar Ventures. And then I was going after some larger dollars before I sold the company.
mm,
And I had deployed William Blair to be my banker. And my last funder, I wanted Emergence Capital to be my last funder. That was
mm.
my
Oh,
goal, you know?
interesting.
And I
Mm,
said, you know what? They took, Salesforce public. They did all these great things. I know them. They know of me. I know what I need to do to get their capital into this company. This is what this company needs to look like. And I even vetted with them. It was really funny. I had a great relationship with a couple of the guys there. And I would call them up and I'd say, just information. I go, would you mind just sharing 15 minutes with me? And they say, yeah. And I said, I want your money, but I'm not asking for it today.
mm,
What do I have to do to get there?
mm,
Who do I need on my board? What kind
mm,
of people do I need on my team?
mm,
How much money do I have to have raised? What is
mm,
my, recurring revenue, my, monthly recurring revenue need to look like? What is my, all of the metrics? What do I have to get you to invest? And I know you want a third of the company at the time you do it, right?
mm,
So I was playing my cap table from backwards forwards, right?
mm,
So
mm.
knowing that they are going to be this much, knowing that I need this much in a team, I realized what am I going to be left with, right?
Right.
And how can I leverage other access to capital or other things? I love, by the way, convertible notes. I
Mm,
love them.
mm,
The reason I love them is because you don't have to have that early discussion on valuation,
mm,
right?
mm.
You're going to have a discussion about valuation for the entire time you're going to have your company. It's always going to be that way, right? Your cap table is going to get beaten up. You're going to have a conversation about valuation. If you can defer that as you're building value, why not? Right? It's like a
Yeah.
free interest rate on a credit card.
Right.
Take advantage of the stuff that you can get right now
Mm,
to be able to give you the fuel that you need to build to that valuation. So that's what I did early on, and that's what I do pretty much for every one of the companies that I have. I
mm,
do convertibles right out of the gate.
mm,
I know, David Burkus's 3-2-1 formula, just like everybody else does, you know.
Mm-hmm.
Every startup's worth $1 million and you're going to give away 30 to 40% in an angel round.
Mm. Interesting.
Right?
Interesting.
I mean, it's kind of like there's no revenue, it's early stage, it's this, you know, you may or may not have I mean, it's the same formula for a lot of the angel investors. So I love the convertibles. I love a KISS. I love a safe. You know, I think there's hybrids now that are really awesome. You don't have
Yeah.
to spend a lot of money on legal, which is also a great thing, you know?
Mm-hmm.
And yeah, you're kicking the can down the road, but I like it. So your question was really about the cap table. So for me, as a founder, I had to always decide, what do I want at the end of this? How much time am I going to put in? How much money am I going to commit my own capital? Which, by the way, I've done that for every single startup. It's not just my time, but it's also my money that I put in. And no, it's not a loan to the company.
Mm-hmm.
Nobody likes paying back founders for anything. Learned that one.
Yeah.
But I always said, okay, so if I want 10% of $1 billion company, do I want 20%? Do I want 30%? And that's going to dictate who I bring on the team, other co-founders. So that's the
Mm-hmm.
other thing is I'm not stingy on my cap table. I want other co-founders with me. So right now, Renew has 1, 2, 3, 4, 5. We have 5 co-founders
Mm-hmm.
on Renew, and we all are coming and bringing value. And I
Mm-hmm.
lean on them just as much as they lean on me, right?
Yeah, no, very
And
much.
so for myself, I will never also have another company where I'm a sole founder.
Mm-hmm. Makes sense. You know, everybody's vested in the
Yeah.
success, right? And so they're out
Yep.
there pitching, doing everything that's necessary to make the company
Yeah.
succeed.
So let
This
me
is
add one more
fascinating.
thing on the cap table because I think
Yeah,
this is also really interesting is that
sure.
I also hate time vesting.
Mm,
I think that's kind of like you're paying somebody to sit in a chair. Why? Especially when you have tools like my old platform, like Optionease, but now there's
mm,
other, you know, tools out there to value stock options that are performance based. I love performance based options, right?
mm,
And you don't earn stock until you perform, whether you're
mm,
in sales or you're in engineering or you're in customer support. Everybody's got a goal and a metric, and it's really empowering because then you don't have to tell somebody how to do their job. You just need to tell them this is what you get when you do it. And they figure it out. It's awesome. Love performance. I love performance awards. I like reverse vesting. I like the ability to first be able to own their shares now and also vote them so that they're part of some decision-making process and you have like you know, a repurpose right or something later. So there's a lot of things you can do with your cap table, but again, as an entrepreneur, you got to make that first decision, which is how much do you really want to own at the end? What are you going to be comfortable with? I mean, of course, everybody's like, well, I want 100%. That's inconceivable, right? If you want
right.
to build $1 billion business, you're smoking something besides hemp. If you think, you know, you're going to do that on 100% and not take anybody else's money and have, you know, build equity and all these other things. So
No,
anyway,
100%. No, those are great tips. I think that especially startup founders who are very nascent into, you know, building whatever. So thank you for all those.
mhm,
Uh, you know, since we have basically an expert here today on cap tables,
mhm.
I would say let me give you a scenario and then
Yeah.
tear it apart because I actually advised another startup and they ended up you know, cashing out or selling, and so I was like, okay, maybe my advice is good, but it's never, you know, been tested by somebody of your caliber. So let's say I start a company and I have X number of founders, but my theory is that I'm going to build something that is similar to what maybe Berkshire Hathaway did when they built their shares, you know, both active shares and passive shares, right? Because,
Hmm.
you know, you don't want too many people talking or influencing your decisions as a startup founding team, I'd argue, because too
Yeah.
many hands in the pie kind of thing, right?
Right.
Um, that initial, you threw out the number $1 million. Like when you start the company, you know, obviously it's an idea, usually without the recurring revenue. Do you value the company right off the bat? Like, do you set a certain number, like $2 million and 200 million shares, where 100 million is like active, you know, passive, and 100 is, you know, using numbers like, you know, they have,
Yeah.
or do you start small with 2 million shares or even a million? I mean, how do you do the
Yeah.
math?
also say, Brandon, where are you domiciled? Like, where is your company domiciled? And there are penalties for having a lot of shares in a pool, right? Like Delaware, I think is not as bad as like California or what have you. But so those are all decisions, and you need a good lawyer who's going to say, hey, listen, let's start out with just 100 shares, or let's start out with, because you can always do a reverse, or you can do a split, or you can do this, and you can change that number, right, as you go along. But why are you paying? Why have 50 million shares outstanding, right?
Hmm.
And
Well,
everybody's paying on it.
so you started off by saying that you're not stingy about them. I guess the reason why, let's say you had 200 million shares, is that at the beginning, maybe you want to get more people at the ground level, grassroots level, to be
Yeah.
vested in your success. So let's say you're
Yes.
doing product market fit kind of surveying and doing
Hmm.
little things like that, or even marketing to a certain degree. You're handing out shares like Travelzoo did years
Hmm.
ago, where they literally gave a few shares here, a few shares there. People are like, what is this? But at the same time, it turned into money. People don't know, like, it's 0.00001% of the actual organization, right?
Yeah.
But I've been thrown shares from different startup founders, and they never ever cashed out, or they didn't have their liquidity event. But as a naive recipient of this, and then 1,000 shares, 100,000 shares, you don't realize that's $5.
Yeah.
So I guess you could kind of throw that out there and say, hey, you're vested, you're going to be vested with 1,000 shares, but they have no clue, like it's 2 cents. So that's why I say that. Whereas if you have 100
Yep.
shares at the beginning, it seems like it'd be kind of challenging to split those 100 shares into those tiny increments to get more people vested. So that's why I guess I throw out bigger
Yeah,
numbers.
I guess you just do a split later, right? So you're planning your cap table as you're planning the growth of your company,
Hmm.
you know? So that's the other thing is when you also go backwards and you say, okay, so what's my exit? If your exit is selling to a privately held company or whatever, that's one thing. If your exit is to go public, there's a range of public pricing that's acceptable, right? So you also have to be really cognizant of the fact that you don't want to overprice yourself. You don't want one share to be worth $1 million, right? When you go
Right,
public.
right, right.
I mean, because people like fractional shares, everybody kind of hates that. It just doesn't work that well. But you also don't want necessarily a crowded cap table either, right? To your point. Like you don't
Hmm.
necessarily want to have, 500 people on your cap table before you've raised any money.
Right.
Um, so I like warrants for some of that, right?
Hmm.
So
Hmm.
there's the combination of warrants, there's the combination of, like I said, different kind of stock instruments, non-quals, qualified, those sorts of rules and different things, performance awards. You can do phantom awards. So you're actually giving somebody an incentive that's based on share price and share value. A little bit further down the line, I would say not
Hmm.
right out of the gate, but
Hmm.
like let's say you got an operating company and you've got this trajectory of things and you say, well, hey, if you increase your sales to a salesperson, you
Yeah.
double your quota, I'm going to give you some shares worth this, or the share value of that, we're going to pay you out in cash. Cash is still awesome. People freaking love cash, you know?
Sure.
Well, because you said it early on. You've gotten a lot of, stock that sitting in a pile over there that's not worth anything except for maybe a match, you
Right.
know, like
Right.
a strike a match, like light it on
Exactly.
fire.
Exactly.
Um,
Exactly.
so you like again, you just really sit down with it and let it rest with you for a second, right? Take your cap table and say, how much do I want to have at the end? Who do I need to put on my team to get there, right? Like when I had my software company, I wasn't a software engineer. Hell no. I'm a financial person. I knew what the UI needed to do to a T, but I could not articulate. I mean, I could articulate some of it, but I couldn't certainly develop the software. So I had a team of software, two guys on my team that were founders as well. And they got shares. And I knew that I had to give them shares of this company to get them to come in and work with me on this. And I couldn't pay them, obviously, you know? And so I had to work that backwards. Again, do
Interesting.
that, you know? The other thing is that, you also want to be conscious of taxes. I mean, taxing of stock is really it's a real thing. I know companies that got into trouble because, they didn't do the right things. Do you do an 83B election? I'm not sure. It just really depends. And I would really set up your recipients of your stock
Mm,
with some thought. And I know a lot of companies are like, I'm not a tax expert. If you have any tax advice, you need to, so companies have taken a weird approach to stock over the years, which I think is interesting.
mm,
So a lot of times, like we would never tell an employee what the value of their stock was when they left
mm, mm, mm.
because I didn't want them to exercise.
Yeah, yeah,
And I'm like, that's kind of weird if you think about it, right? Here you've got an employee who's earning these shares and you really don't want them to exercise because they're not going to be here anymore. And then those options go back in the pool and you can give them to somebody else.
yeah.
Kind of a bizarre way to think about stuff. But again, you need to start thinking about that. We
No.
had A and B shares at Santa Fe Farm. So we had a
Okay.
voting block and we had a non-voting block,
Okay.
you
Good.
know? So
Good.
that was kind of a way to handle that question that you had before too. So,
Okay.
hey, my disclaimer, I'm not a lawyer,
Mm, right.
rules evolve, rules change, trends change, venture firms change. So if you have really funky things like I love double trigger. So
Mm,
when you exit a company, you can't have all your employees walking out when you are exiting the company, right? So
mm.
if there's a change of control provision where, they accelerate all their options and they get a chance to walk out the door, that's not good for a buyer.
Yeah.
So you're going to see that in the price that you're getting for the company. You're going to see that
Yeah.
ratchet down because they're going to have to now, on top of that, incentivize those people to stay.
Interesting.
So that's why I like the double trigger is what it's called. So
Mm,
basically, they accelerate and or the company has the right, if they're coming in to buy it, to keep you on and keep you vesting under your same plan. So, a little bit of golden handcuffs.
So how come isn't there, I mean, why aren't there books out there written by you on the subject? I mean, just listening to your 15, 20 minutes, I'm like, Jesus, you should be out there versus the other folks that are publicized on this topic. Yeah, I mean, did you have a finance background? I did not. I forgot to even check. Is
Yeah,
that
so my degree's in finance. I worked for Deloitte for a couple of years, and that was enough. No offense, Deloitte, still my favorite people on the planet. My alum circle, right?
mm,
Um, Even though I was there a short term, but I realized that that structure just didn't work for me. I really liked being an entrepreneur. I still like, and it's kind of weird. I like being on the edge. I think that makes me a little sharper on things when you're about ready to run out of cash and, all of this, and it's your problem as the CEO. I mean, it's your situation. You got to own it. And it's just a different thing. So I just really enjoyed that. I also like forward-looking finance, not backward finance, and Deloitte's a great audit firm and they look at the history of what happened in a company. I liked being on the other side. So I was more on the consulting side with Deloitte and had some really awesome clients. And it was back in the day when I could be the CFO and still work at Deloitte,
oh wow.
the
Oh
good
wow.
old days prior to Arthur Anderson. Um, and and then they wanted to pluck me and put me in another company, and I said no. I love it here. I was working for this company. It was a turnaround. It was called New Media. We were in the PC market, and it was just fantastic, and I loved it. And I'm like, I want to be in a company and build that value. So anyway, yes, my
just
background's in finance.
just curious, new media, you said it's a PC hardware company. Is it in
Yeah.
California?
Yep.
Did they sell to Gateway?
We originally sold to it was a Korean manufacturing of PC cards. So New Media Corporation was the inventor of the PC card. So PCMCIA. So I'm really dating myself back into the early sort of 90s. The founder of the company, a guy named Pearl Perkins, he actually worked on the Atari team. So he developed a lot of the games for Atari and worked at Rockwell and various things like that. And so he invented the PC card. So laptops, which I'm sitting here now, way back
Yeah,
when,
yeah.
had very little on the inside
Mm,
because you had to take up a lot of room for the battery and the processor and all this sort of thing. So if you wanted a modem, you had to stick it in a slot on the side of your laptop.
right.
That's what we made.
Okay.
All of the modems and the LAN cards and you name it. So
Got it. Got it. It sounded so familiar
Yeah.
because a friend of mine's dad, he sold his company to Gateway, and I
Okay.
thought that was the same one, but
Could
no, it
be.
must.
So I don't know if you know Bob Allison down here. He runs a big venture firm. So he was running that for a while when I came back in with the founder of the company, and we sort of took that back and built
Mm,
it, tried to get it back again. And we had some really interesting clients, and we actually just sold it. So it was good. It
got it.
was a good
Got it.
flip. Yeah.
So during this whole process of going from startup one to two to three, and then obviously now seven, and then it obviously you had the background in the finance area, and then on top of that, you had the company that you built. So you're basically an expert at the cap table. But what about other things that you'd learned in those previous six startups? Would you say you're going to apply now? That you're like, I wish I would have done this before? Do you have a couple other tips or thoughts?
Um, I would say probably my other area that I really love and I've embraced with every company is understanding your customer like really well, you know. And we had a saying, I ran a chapter of Golden Seeds, which is a women's investment group. And
Mm,
so I ran the Southern California chapter for 4 years. And we have about 300 members of Golden Seeds, and we invest in women companies and startup companies. And we always had the saying of, I've got a solution looking for a problem. Okay. So you can build all these great things, but if your customer isn't going to buy it and you're not fulfilling a need, not necessarily a want. Sometimes you can get in on the want side, but I like going after the need and really understanding how that customer thinks and what do you have to do as a company to address all those things. And I learned that really early on, and for me, that has always been an underpinning of everything. So if you've got your customers and you really are listening and you can understand, let me take an example. We're working with some really large brands and, in the packaging space, we need to understand their entire process from
mm,
procurement, financial, legal, client, customer facing. So these are, you got a package that you're putting cookies in or something, that customer is going to be holding that package, right? So you've
mm,
got to understand that your replacement product needs to fit in all these. What about your distribution network? Does it fit into the machines that they're already using for their packaging? So if you ask your customer to change more than one or two things, they're going to walk away. They'll be willing to do a couple modifications, but most likely not. And then the biggest one is, Brandon, price.
mm,
Some people think, hey, I've got this, better mousetrap. Somebody's going to spend more money on it. So know your customer to me is
mm,
super important. Um, I've actually had customers on my cap table.
mm.
you know
Yeah.
yeah, because and it wasn't a strategic investment. It
Mm,
was a company that helped me build some of my software for the accounting side, and it was a couple of accounting firms. And I asked the partners and I said, the people that are helping me, can they have some stock in the company? And they're like, sure, why not? Good for us. you know it
yeah.
incentivizes us. We can resell your software and be a partner and be a customer, and it worked out great. So
Yeah.
anyway, we can pull everything back to the cap table if you want. But I would say that was really big for me, is just to really understand that and being able to problem solve for your customer and not just have a solution that you think might fit, right?
Mm,
Or might
mm, mm,
work, but build the
mm.
solution around those issues so
Mm.
that you can nail it right out of I mean, because you don't have a lot of time,
Yeah. Yeah.
with a customer. You really don't. I mean, you've got to really get them to understand what you can do for them in the first, 30 minutes of a call. I mean, it's
Right.
really quick,
Right. Agreed.
and with all these tools now, AI and all this, I mean, it's going to be harder and harder,
Yeah. I agree.
to separate yourself. That's kind of one. I think another lesson for me is really picking your right team members. I mean, everybody's going to say that, but also your right funders.
Mm.
Sometimes it's really hard for an entrepreneur when they're like raising money to say no.
Right.
It's tough. If somebody's standing there with a lot of, you know, conditions, but they got the checkbook in hand, it's really, really hard
Mm.
to say no.
Agreed. Agreed. It was funny before you said the team, I guess advice, tip, whatever you want to call it. That's what I was thinking. And I was going to ask
Yeah.
you because it feels like that is even more important than the cap table to me personally, and also who funds you, because if you have the right team, then
Mhm.
they'll help you figure out who the right funders are. What are
Yeah.
some tips or thoughts you've had around, that? I mean, because these days you find people online. These days, honestly, the transparency and just there's so many different issues with getting to know people that
Yeah.
I feel like it's more challenging than ever. But at the same time, maybe you still lean into things that you've figured that worked really well. So what are your thoughts? Because I mean, you've obviously had to choose and maybe fire lots of different people.
Yeah. Yeah, it is really hard to find the right people. And I wish I had like some magic bullet or some secret sauce around it and be like, "Oh, if you just did this, that, and the other thing." I
Right.
would say one of the things that my worst employees ever, and these are executives on down, have been referrals from some of my funders. you know and it was interesting. I had to fire one. He was a chief marketing officer for one of my companies, and he came through a funder, and I knew right away that it was not going to be a good fit. And it wasn't that
Mm,
he wasn't a good person, and it wasn't that he wasn't successful, but when you bring in somebody from corporate America into a startup role,
mm,
it is really, most cannot make that transition.
mm.
I'll just put it
Agreed.
out there right now. So you have to be really careful on your team, like when you're picking people, is the name brands are great. You want people that have worked at Amazon and have done this and Cisco and here and there, and they have that resume and that experience, but really dig into what they did there, right?
Mm,
Were
mm,
they an intrapreneur in those organizations? If they were, hire them. Don't let
mm,
them go,
mm,
because they learned how to work within an organization to get shit done.
mm.
Sorry, get stuff done. Um,
No, it's great. I love that.
which, and unfortunately, sometimes a lot of corporate jobs, you have to learn how to work in the corporation, and maybe you don't get a whole lot of stuff done, right? You're more politicking. And so, um, be careful. There's this phrase, right?
Mm,
Hire long, fire fast.
right.
And you have to. You just do not have time to, give somebody another try or do this. Here's something too. I have had uh, three people, two women, one man,
Mm,
in my career that I've
mm,
hired in different companies. I have fired in different companies, and I have brought them back to other companies.
mm.
And you're probably going, "Are you crazy? What's the dealio?" um, won't say any names. So sometimes you hire the right person, and this person is amazing, but you hire them at the wrong time in the
Mm,
company. You
mm,
hire them for the wrong position in a company.
mhm,
Sometimes life just happens and they have
mm.
other things that are a priority for them at the time. Doesn't mean they're a bad person. Doesn't mean that they don't want you to be successful. It's just that they can't do it with you right then,
Right,
right?
right.
And so I've had, as I said, three people that I've had on that same thing in my career, where I've had to like fire them from one job or another, and I brought them back into something else. And one of which is a woman that I will bring to every single freaking company I've ever going to have in the rest of my life, because she's amazing. Because we found her genius
Mm.
and how she and I work together. And she just had a baby, so I can't grab her. But she's amazing. And
Mm,
but you know what? It takes sometimes those really tough conversations and sometimes a walk away before you
yeah,
can do that, right?
I agree.
So don't beat yourself up if you have to let somebody go, but just do it professionally and all that sort of thing. But sometimes it's just not the right time
Yeah,
either, you know?
agreed. Agreed.
So yeah. I liked
Mm,
LinkedIn because I get to pursue people.
Mm,
I don't like LinkedIn. I don't put job things up there. I used to use Indeed for marketing,
mhm,
really, the companies, but I don't really use that either. If I have a position, I'll use my network,
mm.
you know, not necessarily my funders, but I'll use my network and I will find that those people that I want to target, right? Like who have done something at a similar company or have done something in the field that I'm in. Like, for example, I've got a guy on our team right now, Douglas, who has just been phenomenal, and he's fitting into a space that none of the co-founders in Renew could do.
Mm,
He's been in the
mm,
material side and very
mm,
specifically in certain things that he brings tremendous value. And we've been building a relationship. He's still a consultant. He's still not on officially on the team or anything yet, but
mm.
we have goals for him. So when we hit certain milestones, absolutely he's there.
Yeah, yeah.
So,
This is amazing, Kim. I'm enjoying this so much. I almost feel like you could be the expert or the person to ask questions on almost every part of the formation of startups. And I feel like this is kind of your sweet spot, right? You don't necessarily like to work on the enterprise level per se. You like to
no.
build, right? And build at the startup level, maybe even scale up level.
I'm the scrappy builder. Couple $100 million in revenue, and I'm like, then it gets proceduralized. And that's what we had at Oryx Energy. Like when we, were on this pathway with DuPont and everything, I'm like, that's not my skill set, you guys. It's an oil company and it's this, and I know how to do certain things, and I know how to get certain things done. And I don't have that discipline in me to take it from there to there, right? Could I? Maybe, but that's not where my passion is. And so that's why I have had a lot of startups because I know when I need to step away and bring somebody else in at that next level to take it to the next level, right?
Right,
That's also
right.
very humbling. And I think all entrepreneurs really need to understand that too.
I agree. I agree.
I
Um,
don't think there's very many that can go from 0 to a billion.
mm,
Probably count them on one hand, really, if you think about it,
mm, mm.
you know?
Yeah, there's a lot of different skills along the way, so I agree. I agree.
Yeah.
So I would love to talk about Renew and your current situation because that's how we met.
Yep.
And I mean, I did not know it was this early. And so
Yeah.
that almost saddens me
That's why we're
for
at Koretsu.
yeah, I'm kind of sad now to I introduced you to somebody and they kind of didn't really pay attention to I think the actual details because it's not their forte, which is fine. They have plenty of other opportunities and stuff like that, but because it's so new, tell us about this opportunity. What is an angel out there who has not found out about this opportunity? What are they not seeing here because or they probably don't even know about the opportunity, so tell us what's going on
Okay.
this.
So we are in a very unique position where we have proprietary technology that we have an opportunity to acquire with capital, which would put us into a place of literally owning the alternative pulp market. And what do I mean by alternative pulp? So when you have a napkin or a to-go box or anything else in between, paper cups, etc. Right now those are being used tree-based fiber.
Hmm.
Okay. And everybody buys pretty much the same sort of tree-based fiber from different, paper mills and different things all over the world. We're putting a lot of pressure on trees, right?
Hmm.
Because at some point you can only recycle trees for 4 or 5 times and then they sort of break down and you've got to cut down another one, right? And get the virgin material back.
Right.
So we have technology that uses an alternative method and uses alternative fibers. And what do I mean by that? Well, how about corn husks? Well, how
Hmm.
about wheat straw? How about grasses? How about spent agave? Like when you make tequila and you have all this extra biomass left over. How about hemp that is actually grown in pretty much any state in the United States? An economic opportunity for farmers to grow a material that we can now take that material, turn it into pulp, and turn it into packaging. We could literally have, I don't know, let's pick a brand. What's your favorite food,
uh,
Brandon?
I personally like pho.
Okay. So Can you buy pho in like a bowl and you can heat it up like in the microwave,
Yeah,
maybe?
there's definitely lots
You
that,
know,
you
right.
pick up. Yeah, yeah, exactly.
Okay, so let's say we have your favorite pho vendor and you're a customer and you pick up
Yeah,
this bowl and it's made out of hemp. So
yeah,
literally you can make your pho, your soup, you can heat it up and eat it, and then take that bowl and put it in your backyard and use it as a planter and grow something out of it because it
interesting.
composts in your backyard. So we're literally allowing brands to grow their own packaging. That's it. Very simple. Sounds simple, but we've got to build the infrastructure. And not to get political, but I think we've all recognized that we've offshored a lot of things in this country, in the US.
Yep, yep,
And in order for us to domesticate some of those things, like let's say we want to make cookies again, or we want to make our pho in the US, we're still relying on the packaging coming from overseas.
yeah.
So why don't we bring that packaging here too? Because then when Apple wants to spend $600 billion to domesticate the production of the iPhone, we can now have a package that's literally sitting right there at the point of distribution where they need it, right? And we're growing
Mm,
it here in the US for them.
fascinating, fascinating.
So for
And
investors, this is what
yeah,
we need. We need long view investment. I need impact investors. I need people who are looking at this going, wow, we've got to get rid of plastic.
uh-huh.
We don't want to just use trees. We want to start looking at these alternatives. They're viable economically, environmentally, circular, like all of these things are really awesome. And we need to start looking at this as a class of investment and starting
Mm,
to put some money in it.
mm,
Mars just did that. They put out $250 million into sustainable packaging.
mm,
They're taking a step in,
mm,
not leaning in, they're taking a
mm,
full step.
mm, mm.
And we're going to see a lot of that. So
Okay.
if I were an early investor, which I am, I would definitely get in on this. I mean, we're doing a convertible note round. We've got a really nice moderate cap on the valuation. Um, I'd been pitching to the network at Kretsu. I'm going to jazz that up again after the summer because, nobody invests over the summer. So we're going to hit
Yeah.
that up again in January or in September,
Okay.
and move that along. So we're raising 5 million in total. I've probably got a pretty good idea on a lead investor that's a strategic. So we might
Mm.
go a little bit more than that.
Okay,
So,
interesting.
yeah.
So do you need a specific type of investor though? Let's say this person doesn't work out or this organization doesn't work out. What are the investors out there who are potentially listening to today's podcast? Is there a persona or a type of investor? Yeah, you're looking at.
Yeah, I like the impact investor. Sustainability's gotten its kind of butt kicked a little in the last 6 months, from this administration and just generally, I think people don't understand what it means to be a sustainable investor because it
Mm,
just means something for everybody a little different. I need investors that are taking a long view on building and domesticating infrastructure for the things that we need here.
I think
And,
there.
it's great to have an iPhone here, but like I said, if you've got to wait for your package to come from China and it's got 100% tariff on it, that makes it very expensive. Maybe not for an iPhone, but how about an espresso coffee pod, right? You know, you're going to want those here. So there's a whole array of products that we have that could really, fit that. So it's great.
Well, there's one investor I'm going to just say out loud right now, and maybe we'll manifest it to come true.
Yeah,
I think their company is called Long Range Investments. So, and then
nice.
I'm going to send you a list of about 70 or 80 others as well that you might
Wow.
want to look
Okay.
at. So,
Okay.
yeah, well, I'll tell you more because obviously I didn't
Yeah.
get you updated on what we're doing, but
Yeah.
no, I just really wanted us to hone in on this part because yeah, you're a great CEO person, person that's going to impact society, and for me personally, it's just important to profile people like yourself, and
Thank you.
I call them good peoples. so,
Good
so
peoples. No, I like that a lot, and Brandon, you're right. And, it's hard, it's really hard because, everybody's got a short view on investment still. I mean, we did too. I'm like, how are you going to make this a 5 to 7 year exit? Like, seriously. I mean, Optionease was 7 years for me. Oryx Energy was 6.5. I mean, it was like, oh, and you know what? It was early. I could have taken Optionease probably another 2 or 3 years and quadrupled the value,
Mm,
you know. But I was getting a lot of pressure on building and going, and at some point you're just like, okay, this is a good deal, right? Um,
exactly.
but I like DAF. I don't know if you've been dealing with any DAF funds and so forth. I think that's brilliant, you
Mm-mm.
know, because then, the generational wealth transfer, they get the tax situation immediately. So those are donor advised funds, probably for your audience that may or may not know that. But I think it's a brilliant move. It really kind of hits the bucket of philanthropy, but then it creates an opportunity to invest in these privately held companies like mine, where we could have a long view,
Mm,
right? We can
mm,
take 10 years to
mm,
build a $1 billion business as
mm.
opposed to trying to hit it out of the park in 5. You know,
Right.
we're building infrastructure, Brandon. It takes a while. I mean, it takes
No,
us
it
2 years to
does.
just build one site, it's
Yeah.
it's
Yeah.
gonna just take time. So
I would agree. I would
anyway,
agree. Yeah, no, this area is where I think we'll have to talk more out
okay.
of the podcast because I completely agree with you. There's so many businesses. I mean, because it's transformative, right?
Right.
And when we're talking about transformative, it's different. It's not
Yeah.
these overnight successes. And so I'm glad to hear that you guys are pushing forth on this. Well, we've basically come up to the hour, and what we do typically at this point is I like to ask you 3 questions, and so we'll
Okay.
dive in that if you don't mind, and some to kind of help other people figure out what to do in their lives. And the first question is,
Hmm.
who's your hero?
Oh boy. It ebbs and flows a little bit. I'm gonna say Sarah Blakely still. So she started Spanx, right? And what I love about her is she just, first of all, she was the customer. And I always like that. If you're doing something because you just want it and need it. And then she had a really interesting, if you've ever listened to whatever she's, kind of put out there. Um, and then there's another one I'm going to mention too in a second. But she really went and said, I'm going to go visit like the Hanes factory and really see how they make women's, stockings and, pantyhose and all these other shapewear and whatever else. And she walks in there and she says, you know what? God damn it. They've got a plastic mannequin that they used for sizing women.
Mm,
And
mm.
it was all the same shape, you know, but it was just shorter or longer, you know?
Yeah.
So women have curves and this, and we got stuff sticking out all over the place, so we're different. And so nobody had actually taken a women's body type and
Mm.
built undergarments for it. And she's just
Right.
like scratching her head and she's like, what? So I love how she approached that from the almost common sense
Mm.
application of, hey, I'm just going to look at this. It's not like it was like a sexy area. I mean, it's like, pantyhose. I mean, but the fact that she cut the foot off the bottom because she goes, I want to wear these with sandals. It was just brilliant. I love
Yeah.
that, you know?
Yeah.
Um, the other one is I think it's Katrina Lake. I'm gonna make get her name a little bit mixed up, and if I'm sorry about that, but she was an idol for me. I started a company called My Jane, and My
Mm.
Jane was actually in the cannabis space, and we curated products for women to try because they
Mm.
were done with Ambien, they were done with Adderall, and taking these other kinds of drugs, which, by the way, were never designed for women.
Mm.
I'm gonna let that sink in for a second. So Ambien was never tested on women before it went and got approval through the FDA. And
Mm.
so it was approved for somebody that weighs 180 pounds and male. And so
Mm.
what they did is they said, well, for women, we'll just cut the dose down a little. Women freak out. So women were freaking out and still do. I mean, women like We sleepwalk. It's a hypnotic. It's not. So anyway, I started a company called My Jane, and it was basically profiling a woman and saying, what is it? What can we help you with? Are you looking for a sleep remedy? Well, are you allergic to chocolate? Are you allergic to this? What about that? How do you feel about these things? Do you want to smoke? Do you not want to smoke? And so I was using the whole Stitch Fix algorithmic way of approaching a customer. And what I loved about Stitch Fix, again, know your customer,
Mm,
they made it their life mission at Stitch Fix to know you and to get to know you and evolve with you. So they
mm,
wanted you when you were just getting out of college and you needed your first outfit, right? For your job interview. Then they
mm,
got to know you when you were going on vacation and could curate an outfit for you. And then they got to know you when you got your next job or you had a baby or you did all these things in your life and they followed you through that cycle. So their long-term value of their client was like 8 years.
mm,
8 years for
mm.
clothing? Are you kidding me? That's brilliant.
Yeah.
And she brought her baby when she rang the bell at the New York, stock exchange. So I
Beautiful.
really appreciate her too. So she's a hero for me. And these are women that really kind of pushed the envelope, right?
Yeah,
They weren't going to sit there and just, step aside, little missy. I mean, they were going to really, take this to the end, and I really appreciate that. So I have
that's awesome.
others, but that's okay. We'll stick with those two.
Well, you might be up there on that list soon enough. But how about role models? Who would you say are good role models, especially with today's climate and so many different areas?
So I'm going to pull out a role model that also she's kind of one of my heroes too. Her name is Muriel Siebert. Her name was Muriel Siebert. And if you don't
Mm,
know who she is, you need to look her up. But she was the woman who had the first seat on the stock exchange back
mm,
in the 1960s.
mm,
And she got that seat because they didn't know she was a woman. When you have a name like Muriel, you don't know necessarily. And it was on the application, and she had to get a sponsor, which was a friend of hers in the financial area. So she had Siebert, which was Muriel Siebert and Company, which was a
mm,
financial advisory firm like Morgan Stanley and all these companies, right? But she literally had the first seat as a woman on the New York Stock Exchange, and they tried to kick her out because they
mm.
said she lied on the application. And she says, "What do you mean?" "Well, you didn't let us know you were a female." And they said, and so she said, "Well, where on the application does it ask me that?" And it did not. They closed the women's bathroom in the stock exchange so she couldn't go to the restroom. Oh, they made it very difficult for her. And she basically said, "Fuck it. I'm here. I bought the seat. I was sponsored appropriately, and I'm going to stay." She then went on to the Board of Education in New York and
Mm,
started a literacy program for kids in high school,
mm,
to make sure that kids understood what it meant to have a checkbook.
mm,
They don't teach that in school. Isn't that
mm,
weird? Kids
mm,
don't even learn how to budget. They don't know what finance is. They don't understand about savings and this. At least back then they didn't, right? Women couldn't have a credit card in their
mm,
name until 1974. So
mm,
she broke a lot of the ceiling, a lot of boundaries. She was very vocal about financial literacy for women.
mm,
Um, She was just brilliant. And when she passed away, she did not have any kids. She only had her dogs. And so
mm.
she left the firm to her employees.
Beautiful. Beautiful.
So she's a
Great, great.
hero.
Yeah, no, completely. Great women to profile. Thank you for that. And our
Yeah.
last question is much easier, fortunately. So,
Oh, all right. Well, I don't know. I don't know.
so what's your favorite food? You asked me what I like is pho, but what about you?
So I'm Scandinavian. So my half of my family is. The other half's Hungarian. So I have an internal struggle going on all the time. Um, I would say smoked fish. I mean, for me, we do this thing at Christmas time, which is a Swedish smorgasbord. And so I wouldn't say it's necessarily the food, but it's the ambiance and it's the time of year and everything else. So we do smoked fish. We have herring. We have all these things that just kind of like I don't know, trigger something in me that is my heritage. So I'm
Mm.
going to go with that one. And also Swedish pancakes are delightful.
Okay, very nice, very nice. Yeah, I haven't heard of either one of those, so I'm gonna have to explore. So those
You
sound
know
really
what?
good.
I'll make it
What?
easy for you. Go to like IKEA because you can actually buy Swedish pancakes like in the frozen section, and then you put
Uh-huh.
lingonberries on them and a little bit of powdered sugar, and they're fantastic. They also have a
Perfect.
really nice selection of smoked fish,
Mm.
and so you'll be able to kind of hit that up. So it's kind of one-stop shopping now for us Swedes. Just going to
Yeah,
IKEA. It's
good
great.
point. I need a little furniture back here anyway, so that's gonna be great.
So, oh my God, Brandon, I got to tell you the
Yeah,
story before we go because this is crazy.
sure.
Speaking of IKEA, I'm in Amsterdam right now, so this is a working holiday for me. I'm in Amsterdam, and we went to the Museum of Death. Sounds very morbid, but it isn't. It actually talking about your favorite food. So it's celebrating cultures and how they use food in death ceremonies and part of death, right? Because it's sort of like this thing. And so they were talking about the Dutch and what their traditions are with their funeral cakes and different things. But anyway, IKEA makes coffins.
Really?
Swear to God. Swear to God. And they have them advertised there, and I have a pamphlet. I'm going to save it for you. But it's like $89, and you can buy a coffin, but you have to assemble it.
You have to assemble it.
I swear to God. Oh my God, it's the funniest thing. So my husband and I are in this thing going, oh my God, look at that. You can, but who's going to assemble it? You're going to have to order it and assemble it yourself before you die, or like have one of your loved ones.
Right. Right. That is hilarious. Thank you for
So who
that.
would have thought IKEA, man, they're on the cutting edge, looking out for the environment. Love it.
Well, Kim, this was amazing today. Thank you for being here. And all I can say is that I assume other people will want to interview you as well. So how can they reach out to you if they would like to have an interview, or maybe even ask you about the
Yeah.
round, contribute to the $5 million. So how do they reach out?
Super easy email for me, which is kim@renew.earth, and it's RENW. So RENW.earth is my email. Also reach out to me on LinkedIn and throw yourself in there, tag Brandon and tell me you listen to this podcast, and let's connect on LinkedIn.
That would be great. I'd love to see these
Yeah.
reach outs too, as long as they're not these spammy, AI generated.
They're getting pretty good, aren't they? You know what?
Yeah.
There's like this formula. I love it. It's like, hey, Kimberly. Hi, Kimberly. What's up? I mean, it's like all these different, and then they end it with a little different salutation each time, like cheers or, whatever. And I'm
Yeah.
like, yeah, they're trying, they're poking, seeing which one I respond to.
Exactly. We had Kevin Henriksen, which he might be actually from
Hmm.
the Norwegian area, but he on the second episode, and yeah, he was talking about 150 inbounds a day. So I don't know where you're at, but
Yeah.
yeah, once your name gets out there, and then any points of success or whatever that they see, then they're all
Yeah.
over you. So
Oh, yeah. And then they sell it, right? So then you're in
yeah,
trouble if you respond sometimes. But,
exactly,
it's
exactly.
the world we live in, and we just need
Yep.
better filters.
We do. We do.
Well,
Well,
hey, Brandon, thank you. This has been fantastic. I appreciate the opportunity again.
If your calendar isn't already set, you're missing out on startup wins. Industry leaders, top advisors, and incredible tips await. Come back for future great episodes and entertaining guests, and come back for more insider strategies and incredible stories from the brightest VCs, founders, and operator experts. We're bringing you the best in the business twice a month. Hit that bell and stay winning with Startup Wins. See you soon.